Short exercise 5-11. We're going to be journalizing the closing entries for a merchandiser. So Rocky RV Center's accounting records include the following accounts at the end of December. So we have some accounts and they are in a random order. And we're going to journalize the required closing entries. So we're going to close revenues, expenses, and draws. And then we'll determine the ending balance in the Rocky capital account. So the whole closing process is done just to figure out, well, what is our new capital account? Because revenues increase capital, and expenses decrease capital, and draws decrease capital. So let's find out what their current capital account is. It's right here. And I'm going to put that in my scratch paper T accounts. Of course, this is Excel. I recommend you do this on a piece of scratch paper. Notice we have capital of $198,100. So that's our balance before we do any closing. $198,100. And notice my T account updates shows us our current balance. So now what I'm going to do is I'm going to move this up. Requirement 1, journalize the required closing entries for Rocky. Record debits before credits, of course, as always. And select an explanation. So here's our accounts. And the first thing we want to do is start by closing the revenue accounts for the period. So let's find our first revenue. So looking through here, starting from cost of goods sold, working my way down. I don't see any revenues on this side. And then starting over here, working my way down. Here we go, sales revenue. So we got $636,500. So I'm going to put that into T account. This is before we close it. So over here in the T account, I'm putting $636,500. So notice we have a balance of $636,500. Now the question is, how do we close an account that has a credit balance? We need to debit it. So over here, I'm going to close the account, $636,500. Notice I'm putting it in red. I'm putting it in red to remind me that this red is the closing entry. So notice we have debited sales revenue. So over here in the journal, I'm going to find sales revenue. And I'm going to debit the amount of cash, or excuse me, sales revenue, $636,500. And I forgot to mention over here on my T accounts, on the left column, I decided to put all the accounts with a debit balance, which means expenses. Remember, cost of goods sold is an expense, and draws. Over here on the right side, I've put the accounts with a credit balance, which means the revenue accounts and capital. And then down here, I've got income summary. And remember, income summary has no plus or minus side to it. All right. So remember, we're closing the revenue accounts. So we have to find the next revenue. Working my way down here, here's our next revenue. Interest revenue, $12,000. So before we close it, interest revenue has a normal balance on the plus side, which is the right side. And then to close this interest revenue account, I'm going to have to lower it. So on the lowering side, the debit, I'm going to put $12,000. And notice it's going to close our balance. So this red, remember, is the closing entry. So I'm going to close interest revenue. And I'm just going to copy and paste that interest revenue amount, $12,000, copy and paste. And let's see if we have any other revenues. Do you see any other revenues? Now, here's a revenue that a lot of students are going to forget is a revenue. Sales discounts forfeited. So remember, forfeited means given up. So we could have called this account sales discounts given up by our customers. So this is a revenue account. So that's why I've put it over here. So notice there's 2,000. So I'm going to put the 2,000 over here. Now how do I close this $2,000 balance account? I had to put 2,000 on the minus side. And so this red 2,000 is my closing entry. So I'm going to copy and paste and put that over here. Sales discounts forfeited. And then looking over here, I don't see any other revenue. So I'm going to close this to get it out of my way. Now, notice obviously this account does not balance. So to find the balancing amount, we're going to add the debits. So if we add these three numbers, we get 650,000, 650, comma, 500. And what account is this? Now remember, revenues, remember these three are revenues. Revenues increase capital, but we don't put them directly into capital. We put them into the income summary account. So I'm going to take this 60,500, that's income summary, and I'm going to put it, because this is a credit, I'm putting it on the right side, down here in my T account, 650, 500. And now we have a balance on the right side of 650, 500. We need an explanation to close revenue accounts. Fantastic. Next, we need to close our expenses for the period. So let's open up our chart of accounts, or this data table, I should call it. So what we're going to do is, let's go, starting from cost of goods sold, let's find our first expense. Now a lot of students forget the cost of goods sold is an expense. It's the only expense we have that does not have expense in the title. Therefore, a lot of students forget that. So cost of goods sold is an expense. So I'm going to put the $372,000 on the positive side, because that's where the normal balance is, 372,000. So our balance in COGS is 372,000 before we close. So how do I close this account? I need to put 372,000 on the other side. So now the account is closed. So the way I close this account was by lowering it. So this 372 as a credit, I need to put that in over here in the journal as a credit. And that's cost of goods sold. Now I skipped a line because the debit account has to go first. And we'll figure that out later. So going down our list, what other expenses do we have? Right here. Rent expense, 25,700. So I'm going to put the 25,700 over here. So again, this is the balance before we close it. So how do I close that account? I'm going to put 25,700 on the right side. So this 25,700 has to be a credit for rent expense. All right. So after rent expense, do we have any other expenses? We've got, here we go, depreciation expense, $13,000. So I'll put that in the T account so we know what it looks like visually before we close it. So how do I close an account that has a debit balance? I need to lower it with a credit balance. So the 13,000 is my credit account, or credit amount. 13,000, and that is a depreciation expense on the building. Oops, wrong one. All right, so we've done depreciation expense. Do we have any other expenses? Yes, we do. Delivery expense, $300. So delivery expense, $300. Normal balance is on the plus side. So to close that, obviously, hopefully you're getting the idea of how this works. To close that, I need to put it on the minus side. So the 300 goes over here for delivery expense. So the next question is, what account, well, first of all, let's figure out what the balancing amount is. So let's add this, plus this, plus this, plus this to get our debit amount, and we should get $411,000. 411, comma, 000. So what account do we close this to? Now remember, expenses lower capital, but we're not going to close it directly to capital. We're going to close it temporarily to income summary. So I'm going to now post this down here to income summary so we can easily figure out what our balance is. So our new balance is $239,500. How did I get that? Take $650,500 minus $411,000. and we get $239,500 as the balance. We will need that later. So we close the expense accounts. All right, so this helps us if we put in a label about what these are. So this is revenue or revenues, and these are expenses. So what does this $239,500 represent? Well, it represents revenues minus expenses. So this is net income. Balance is actually net income. So that's handy to know. So the next question is, or the next task is to close income summary. So income summary has a balance on the right side. So how do we close it? We need to put that 239 on the left side. So notice the red one is how we closed it. So I'm going to put 239, comma 500 on the left side, and income summary is now closed. So remember, this represents, the 239,500 represents net income. Oops, I screwed that up. Come back, income summary. All right, so where do we close income summary? So net income affects what account? Net income increases capital. So I need to put 239,500 on, or in capital. Where is it? There it is, Rocky, comma, capital. And we close the income summary. So now let me actually put this 239,500 so we can see what our new balance is. All right, so I'm going to check my answer. And we've got one more thing to do. We're going to close the draws. So here's my drawing account down here. So I need to find out what the drawing amount is. Where is it? Here it is. Rocky withdrawals, 58,000. So notice, or just remember, draws have a balance on the right side. Excuse me, left side. So now how am I going to close the drawing account? I'm going to put it on the minus side, and now it has a balance of 0. So remember, the red is the closing amount. So I need to credit, just copy and paste. I need to, the credit account is drawing going down. Rocky, comma, withdrawals is the same as draws. And then what account do draws affect? Draws lower capital. So the other account is Rocky, comma, capital. So I need to remember to put that in my T account, 58,000. I need to update my balance, my formula. So the balance for capital is 198,100 plus 239,500 minus 58,000. So our new balance is 379,600. And we need an explanation to close withdrawals. One thing I wanted to, I forgot to mention back here when we're closing income summary. So when we close this account, remember that this 239,500 represented revenues minus expenses. So basically this is net income, and we could even put that in parentheses here, net income. So one thing to check when you're closing income summary, you need to make sure that if it's if the number you are closing, which is this 239,500, if it represents net income, what does net income do to capital? Well, net income increases capital. So that's another reason why we put this 239,500 over here on this side, because it's net income, and net income increases capital, therefore it has to go on the plus side. All right. So now finally, we've got our last question. It says, determine the ending balance in the Rocky, comma, capital account. So we've already done all that work for us. So notice in my T account, we had 198,100, which came from the box right here. Okay, we had the 239,500, which came from right here. And then we lowered capital. The 58,000 came from right here. 58,000 when we close it, when we close the draws. So the way, again, that I got this balance is I add up the two pluses and then I subtract the minus, and that gives us 379,600. Wonder if I can copy and paste that. There we go. So our new capital balance at the end of the year is 379,600. Excellent. So that's pretty good. It began with 198,100, which we got from here. So capital went from 198,100 to a new balance of 379,600. That's a nice increase in capital. So that's it for this problem.